Hi guys, John here, forexfire. So you'll have to excuse that little halo that's above my head. Ooh. What we're going to be doing, is having a little look on the chart, okay? And we were going on about bankers candles, the bankers candles, and I set you some homework for you guys that are possibly watching us through the YouTube channel. If you want to see more on what we do as a community, you can just go to the description and have a little click, have a little bit of fun on the links that I've got there and see what I'm about, who I am and what I do to help the community that I'm part of, okay? And just ask to become part of the Discord. But this is not only on my YouTube channel, but this will be in my personal Discord area. And we are going to be going over the bankers candles and just how important they are, the last up before the down and the last down before the up, where we have supply and demand areas, okay? And just how we can sort of make these an order block area. Not only that, what happens once we get a breakout of that particular candle, and what happens when we come back in to mitigate. Okay, so we're just going to head to the chart. We're going to have some fun. Okay. So we got the Euro GBP, and we can clearly see we have a big push. Okay, we've got a push. Now we're doing this on the 4 hour, and then I'm just going to sort of work the way down. Okay. So what we want to do, I mean, I'm going to try and look for some that sort of distinguishes itself and sticks out to me straight away. Okay, so I'm just going to show you an example first of all, right? So this might be a good example. So if we look into here, okay, we've got on here, okay, we'll use this as an example, this candle here. Okay, we've got the up before the downturn. Okay, so if we highlight that wick to wick, you see that there? Okay, so that is your bankers candle. Now what happens is, and how you can use these as an order block entity, is you are waiting for an area to push out between the contracts of that particular candle. Okay, it doesn't matter about the upside because we've got the last up before the down. This is causing a supply area. Okay, so as we are going to come back into that area, that is known as a supply area. When it's the last down before the up, the ones on the bottom are called demand areas. Okay, however, let's just make this a little bit bigger. You can see, let's get the magic wand out. You can see wick, just do that a little bit more, wick to wick. Okay, so what's happened here is, as this candle's closed, we've got the open of the candle is here. We've had the buys in control. Okay, it's went as high as this particular area here, but then the sellers have come back in to try and drive the push the price back down. At some stage, the sellers have brought the price down to here. So what's happened is it's left a trace. It's left a trace between the wax of the candle. So you've got wicks at the wick at the top and a wick at the bottom, hence the name candle and wicks. Okay, so what's happened is, as we've created this on the 4 hour, time is fractal. So when we go down a time frame, let's say a 1 hour, there'll be 4 candles worth of this particular candle inside of that box. Okay, so I'll say that again, time is fractal. So that one particular 4 hour candle, when you go down to 1 hour from the 4 hour, okay, you will see, might have lost this, but we'll find out where we at. See if I can find where we at. Where's our box? There we are. You will see we have around about four candles to make up the fractal time frame of that 1 hour candle. Okay, Just want to go back to where we were, and then see if I can find it. There we are there. Right, and the reason I've marked this one off, I mean, we're just going to start here as an example, okay? You can see, okay, guys, you can see we've had the buyers and then the sellers in control. We've pushed, okay? Then we started a new candle. See this bit here? This bit here, we've had a breakout. It's a wick. It's not the candle body. It's a wick, but it is price taking out liquidity, okay? Price taking out the liquidity of this 4-hour candle, okay? So this is taking out the liquidity of what has been left behind from the buying and selling, right? Now, what's happened is when this comes in, we would then generally get a push or a drive back into the area of this particular contract, this candle, and it takes out all of the buying and selling contracts, okay? So we know on this basis that this would be null and void. So let's say if this had not been met, we would then just drag all this out until we would see a drive from the candles pushing up and down, come back in to meet anywhere on this area. Now, what happens is when the price comes back in, okay, when the price comes back in, we use sort of quarter areas within the actual sort of order block confinement, okay? And you will see this where price will come in and respect the quarters of 0.25 increments, okay? So what I'm going to do, I'm just going to get rid of the bit of noise. That's just a little bit of explanation, and I'm just going to sort of have a little bit of fun, see where we are, and we are going to draw your chart out, okay? So hopefully you're following along. You can drop your comments below and let me know what you think. So just let's go over here, let's have a look. So what we're going to do, we used this area before. We've got the push, and then we've come back up. We've got liquidity here, okay? We've had liquidity building up quite nicely along here. So that has taken my attention to, let's have a look. That's taken my attention. Let's get this marked up. It's taken my attention to this candle here. It's not very big. Okay, it's not very big, but let's just highlight this right out. Go from the wick to the wick. Okay. Let's get this up there, John. Wick to the wick. As you can see, what's happened is now we are waiting for the push and the breakout. We got it. We've come back in to retest right on the line of the liquidity area, okay? So that for me does not constitute as coming right into where the contracts are. So again, from there, what we are going to do, we are going to go to the cog and we are going to put 1500, and we are moving that out as an area of interest, okay? We can see where current price is. We've got liquidity here. And what I'll do as well, because we've got liquidity there, I'm going to do a horizontal rear, and we're going to do that from around about this area, okay? Let's see where price is. Price, again, let's get a bit of sense here, John. The price is heading up very strongly, okay? So what we could do, we could put a short position going on from the contract of this area. Okay, let's get this on there. Let's make that a little bit bigger. So if we do the fibs, and we do that, make this a little bit bigger, get this on, and I'm wanting to do this from around about the 50%. Okay, move this down, and we'll do it to just above that wick. Okay, do it to just above that wick. We've got around about let's have a look, stop level 100. Okay, stop level in ticks. When it comes to ticks, you will take away the last zero like that, and it means pips. Okay, so 100 is 10. Okay, 900 would be let's have a look, see we'll get this right, John. Yeah, 900 would be 90. Okay, so on here we've got 10 pips. Okay, let's take a look, just make sure we get this on the 50% retracement into there. Make sure we have the pips at 10 pips. You can see here 10 pips. Okay, we'll get rid of the noise on there. Hopefully you're following along with this. And what we'll be going to do with regards to the areas of sort of interest, again, we'll just get rid of this. We can use the same sort of concept with regards to how we are moving up on this strength, on the strength of the push. Okay, we can do wick to wick. Okay, we've had a push out, there's nothing come back in to mitigate this particular area. Okay, nothing come back in to mitigate this particular area. Again, I'm just using the same time frame here. We can see wick to wick. Okay, and this is just for education and display purposes. Okay, if we get the Forex Fire magic wand, you can see the last down before the push. Okay, so the last down before the push out, we got the wick. Okay, and as we've come back down, you can see right here, this has come back in to mitigate that particular area. Okay, and we speak about these fractal parts, 75, the half, and it's come back down nearly the 25. So that has been mitigated. However, within this time, within this 4-hour candle, there is many more candles. Okay, so it's fractal. So what you can do is you could break this down to, let's say, from there we could go down to the half hour. Okay, so within 4 hours, there's a two half hours in an hour, so that's 1 hour, 2 hours, 3 hours, 4 hours. There'll be roughly 8 candles of the half hour within that 4 hour there. Let's just take a look. Again, we're going to make this a different color, and hopefully you're following along with this. So let's take a look. We've got within the last down before the up, and this is what you that's come out, and as you can see, we've pushed out. The price has come back, but it hasn't mitigated this area. So we'll make this one purple. Okay, and obviously we want to move this along to 1500. Again, let's have a look at the last down before the push up, wick to wick. Again, we've had the push out, and then it's come down. It's sort of tested. It's tested the area of this candle here, of this order block sort of thing. Okay, so again, we could push that area out to 1500. And again, we could do one. I mean, this would be a good example as well, to be fair. This candle here, wick to wick. Okay, you see how we've pushed out. Okay, we've pushed out and then we've come back in. We've mitigated down to the 75 or 25. They're all fractal, they all mean 0.25s, okay? So it doesn't mean to say that within this candle here, it's mitigated, so it sort of eradicates that as an order block. However, from the half-hour refinement, you can take the 30 minutes down to a 15 minutes. So what you've got within this particular candle, your 15-minute entity, solid block one candle, would then become two candles. You might find a more refined area where the price has to come back to mitigate. Now, I hope this is all making sense. Again, if it's not, rewatch the video and just keep going over it. But what we're going to do, we'll get rid of that one there. And we're going to take it to the next push up to the down. So what we've got is wick to wick. Okay, see on here, wick to wick. We've had the push down, wick to wick, push out. We've come down, we haven't mitigated anywhere in this box. So again, let's just take that and make that a little bit further. And again, this is just for education purposes, a little bit of fun, a little bit of a video so you can go over and re-watch these things over and over again. Let's just go back to the 4 hour at the moment, because it's a higher time frame where we originally looked at. Just take a look. And now we have given ourselves some target areas. Again, let's just minimize this down. Again, we were looking at entries around about halfway of that. The stop was 10 pips. So we've given ourselves, let's say, an area where we would possibly get in on a mitigation based upon this top, and then the stop being the liquidity area of this right here. Okay, on the 4 hour itself, you can see this last up before the down, it actually took the liquidity out of this as an order block. Okay, so what you've got is when this is going to come up to mitigate, when it eventually does, if it comes up to play where we think and it mitigates this area, and if it comes down to this particular area, okay, we can then get a nice risk to reward of 1 to 14. Okay, again, where we are at the moment and where we are playing, we have got a wick to body there. Okay, get the magic wand. What we've got, we haven't got the markets open at the moment, so this hasn't pushed or driven price out of this order block as such. This has not sort of played out of this area. So once it does, it may very well come back in to mitigate and then go back on the push up before we get the down move. Okay, so what I'm going to do, a bit of fun, educational purposes, I'm going to mark this chart up the way it is, and then put it on my forexfire profile. From there, we'll see how it plays out. Again, it is an educational video. I'm just going to quickly stop the share a minute. It is an educational video. It is showing you the concepts of what I look at from my eyes, okay, and my outlook. Again, if I'm open and honest with you, if I was going to be trading this particular pair or this particular technique on this, I would have possibly waited a little bit more for the markets to show the hand going into tomorrow, once the markets open up later on tonight. But again, we're having a little bit of fun. We're having a little bit of look at the markets. We're having a little bit of look at the chart and seeing where we are before the markets open on a particular pair with a particular method, with a particular strategy, and we can come back and see where we have had the outcome. Okay, so I'm going to again share the screen, and what I would hopefully expect, and again, we are not on the markets open yet, I would hopefully think that this may come up to retest this area up here and possibly come back down. Okay, now it is a very volatile pair, the euro, to be honest. From there, what I would possibly expect, if we were going down to this area here where there's some like where there's nothing being mitigated sort of thing. Again, what we could do is something I've been testing with, is set out our areas, our fibs, right? And from there, what you've got is the first area. Once we come down from price moving up, once we come down to that area there, okay, I would expect you to move your stop loss to break even. Okay, once you get to that area there. Okay, so what that means basically is once you've hit entry, you come down to the first quarter. Okay, you are moving the red line down to a few pips after break even. So what happens is, from a disciplined trader aspect, is once this sort of turns on us, and if it did turn on us and it comes back and it hits us on just above break even, all is not lost. Okay, you have to get into the mentality and the mindset of realizing all is not lost. It just means that you've hit your first goal, your first target, and yes, it's turned on you, and you could have gotten so many pips, you could have gotten so much profit, but it's gone out, it's returned, and it's hit just above the break even. You haven't lost anything, you've gained some experience. It just means that you've entered at the correct price, you've entered at the best price, and you've entered at the correct area. It just means that the market wasn't quite ready to do what we were expecting, where it was expecting to come down. Now, as you go to each quarter length, okay, when you hit this one, you would then move the stop loss from that quarter to this quarter. Okay, so then as you're moving down the steps and the areas, you're just moving your stop loss in accordance to the quarter areas that we are hitting. Okay, so I'm hoping this is making a little bit of sense. Again, we'll see where this plays out. If I'm honest with you, with this being a very volatile pair, this is a very audacious sort of trade to be looking at for a 10 pip stop loss on a euro, Great British pound. But again, I'm not here to sort of get everything right. We are here to learn the process and learn from each other. I hope you've enjoyed this video. If you are enjoying the stuff that I'm doing with regards to the banker stuff and you want to know more, have a bit of fun. Click on the links below in my YouTube video right here. Ask to become part of the Discord community, where you'll be learning so much more with regards to this from a bigger community where others are helping each other with this. But not only that, we are a stepping stone to get you to be more confident in looking at the naked charts, getting you to be more confident in understanding when you know to move these to partial takeouts and move to break evens and things like that, and giving you a better mindset. From there, once you become that better trader and understand the fundamentals on why you do things like this, we can take you out of there, put you into a bigger community where we'll put you on the process to become a funded trader. Okay, so I hope you enjoyed this video today. Again, please put your comments, like, share, subscribe to the YouTube channel. From there, again, this is not a trade for anybody to take. It's an educational video, an educational outlook, an educational standpoint to sort of focus and look at what I look at from a day-to-day basis and things like that. So again, this is not a trade idea, guys. If it was, I would have it on my wall, I would have it on my Facebook page, and I would be giving it the hashtag forexfire trade. Okay, so this is just an educational outlook of what we are expecting on the price to move and things like that. Let's see how it plays out. Please comment, like, and share. You want to get inside the Discord community, let me know, reach out to me. There's many ways you can do that. Description below. See you later.